Dear traders, ladies and gentlemen, welcome. This is the next episode number 19 in our MCA Trading Made Simple series. We talked about the basic components of the market causality at the beginning. This is really exclusive knowledge about forex, okay? You will not find this kind of content anywhere, okay? This is like institutional grade knowledge. I myself, I have been on the other side, okay, of the buy side, and like it took me many years to approach the whole topic in a technological manner with the mindset of really trying to expose how forex markets work in 2025. And for the last years they are dominated by the smart money algorithms. They operate according to very logical principles, and most people will never ever understand these principles, and this is a pity, because it could be different if they would pay attention and watch and understand the stuff. Anyway, so we talked about the dumb money positions, the stop hunting, the interaction, the time and range principle, the pre-run counter moves, the post-stop hunt moves, the dumb money tolerance in general, the squeeze mode for all reversals, the net loss reversals, economic news, OSTs, order gap zones, over leverage dumb money, semi-smart money, day chart moving averages, inner range versus outer range, forex speculations. And today it's a bit of a big picture where we're going to talk about the smart money algo cycle, okay? And maybe this is a good way to look at it in a very simplified manner. Okay, and what we're going to do in a second is we're going to take any chart, okay, any time frame, any pair, and we will analyze according to those different phases. It's no rocket science. We know what happened. There can be a squeeze, yeah? What happens? The squeeze collapses, and there's the range, there are 4-hour reversals. At some point there's another squeeze, either a squeeze against the longies or a squeeze against the shorties. Like literally all markets are in one of these phases, okay? Now you could also apply this to lower time frames by saying, you know what? It's constantly switching between like luring, where the smart money is trying to lure in the dumb money, then counter moves, okay? Then the main hunt, then the post-stop hunt, okay? There's a pullback, and then it starts again, okay, literally. So you can see that all the time markets are in those phases. Okay, so let's jump straight into it and let's look at some examples, okay? And this is taken from the MK web, the big markets on the day chart, okay? Let's go through everything, okay? And you will see exactly what we discussed. Short is coming in, okay, they push the market up, yeah. Longies are coming in, they push the market down against them. Again, longies are coming in, pushing market down against them. Shorties are coming in, they push the market up against them. Now here's a phase where the dumb money is like mixed, okay? There's no dominance of either longies or shorties, and what happens? There's like a sideways market, a whipsaw market. Okay, so you see that clearly, so you can adjust, like you can maybe do short-term scalping, but don't try to trade breakouts or something in such a phase. As simple as that, okay? Then what happens? We go back to some shorties coming in, so therefore, there's the up move against shorty, and then massive longies buying over time, which creates a massive down move. Okay, we see the squeeze here against the longies, okay? The squeeze against the shorties. I mean, you can literally see everything in front of your eyes. Then we have, again, mixed up money, so there's a whipsaw phase, okay? So literally any chart we pick, it's all the time those games, yeah? So that means there are times where we can place really great trades, and there are times which are low bias, okay? Here, and those times we decrease the leverage, okay? And as we will see soon in the short-term time frames, there are also phases where there are moves which are not predictable for us, because that is the one step the smart money is ahead also of us ourselves, okay? Anyways, let's take a 4-hour chart, same thing, okay? You see like the squeeze against the shorties, boom, a full 4-hour reversal against the sellers all the way up to the counter band, the same here, okay? Squeeze against the shorties, up move, alright? Look at that. Shorties are into profit, so up move to take them back into loss. Longies are into profit, down move to take them back into loss. Everything we discussed is literally can be observed all day on the MK web. So you need the MK web. Okay, then there's no squeeze, there's little money in the market, so the market goes sideways. Okay. Now let's go to the lower time frames because yeah, but please, you need to understand the significance of that. This is incredible. This is the way to beat the algos. Okay. And look here, even euro dollar. Look at that. Okay, it took the upper MTS. Here's an OST, so can take this one, can take the short term stops. You see what I mean? Here it had an OST, it filled it. Here it had an order gap zone, filled it. It filled this order gap zone, it filled this one, it filled this one. Okay, where the squeeze against the down money shorties, the squeeze against the down money shorties. You see what I mean? A collapse. So news, you know, it changes all the time. Yeah, look at that. Smart money is buying, up move. Okay, smart money is buying, up move. I mean, come on, all you got to do is combine all of that information which is presented and to apply it. It takes a little bit of practice, but not too much, you see. Everything kind of makes sense. You end up like thinking like the smart money algos, okay? The good MCA traders, they think like the smart money, okay? They don't think like the dumb money. The dumb money thinks, oh, where can I trade reversals and down? The smart money thinks, okay, which targets will be taken first? Simple as that, okay? So you can already see here, like combining all the information is powerful, okay? And that's basically how this works. Okay, shorties, up move. Okay, shorties, up move. See what I mean? So, and you see, of course, here where the support and resistance is. Okay, on the y-axis. So it's literally like telling the story and then predicting the next moves based on the market causality. Let's continue this with other pairs. Okay, here. Option strike target filled, MTS filled, we have another MTS, we have another order gap zone with STS. You see what I mean? We had the semi-smart money selling down. So if you see semi-smart money and an OST and no squeeze in the way, of course you can trade it. It's a high probability trade. In over 80% of cases this will work, you understand? This is the edge now, we're talking edge. Okay? Longies collapse. So they go up and take the MTS above the price, you see? Shorties are coming in. So they go up, counter move away from the MTS. The OST comes, they take the OST. Longies keep on buying, they also take the MTS. You see? That's how one can make really beautiful predictions. And then, no big bias. Okay, load up money as you can see. And then the market is the whipsaw in sideways. Then we don't trade, okay? There's no point in trading in a whipsaw phase. Some very advanced traders apply a range trading strategy and so on, but you know, like it's a different animal. And as you can see, like there are some phases where, for example, we don't have a bias, then we don't trade, okay? But if there are targets like here, we can place trades. But here, for example, in the end, there's no high bias, okay? We don't have squeeze dominating, we don't have a net loss. We don't have semi-smart money, we have only a little bit of dark money, and there's targets on both sides. So these are the moments where the market is sideways and low bias, okay? We don't trade it. You understand? So it's literally all the time like that, okay? So you need to be aware whenever you place a trade, especially when it's swing trades and stuff. Where are we, okay? What's going on? Is there a fall reversal? Is there a squeeze? Do we have the do we have an OST? Do we have an MTS? Do we have STS? Do we have an order gap zone? Is some of the two sides in profit and the net loss in the? What is the semi-smart money doing? Okay. What's the most logical step for the smart money? When are the next news coming? Okay. When are markets closing on a Friday? What are the other pairs doing like we discussed last time? You see? It seems a little overwhelming. It's not. It's always the same thing, okay? All you got to do if you really want to get this mindset and beat the AI, you have to think like them. So you can first tape read the MK web every day, make your notes, and once you got it, you go for it. Now, in this context, I should also explain, you have to adjust to the respective market phase. This is what I emphasize in the MK block. There's a squeeze phase, there's easy money to be made by doing the same trades in the same direction over days. But that ends. Okay, then new phase begins. Okay, you always should differentiate. Is it a high bias phase? Is it a low bias phase? Is it a week where we have loads of big news items which can lead to whipsaws and you play defensive? What's happening? Are the markets overstretched because the squeeze is getting old? Okay, that's just common sense factors. So this is basically it. Okay, once you determined what's going on in the bigger picture, then you can place trades with confidence, and then you can really like also do the fine tuning, yeah, and get some really nice entries by knowing even the lower time frames and saying, you know what, I'm gonna wait an hour until the dumb money comes in as I want to, or I wait until this target has been taken. You know, it's amazing even to place your own stops. Let's say you wanted to short, okay, you place your own stop above the MTS. You see what I mean? These kind of things. So it's common sense at some point, but yeah, you need some tape reading at least, and you know, some people that like to really like even not to study too much theory, they just want to tape read first, which is interesting. But I recommend try to understand the big picture, like with the MCA Made Simple series here. Understand everything at least on a more basic level, and then, you know, tape read, and then you see that everything makes complete sense. Okay. Markets are not random, alright? That's not the case. It is a money making machine for the smart money, and it's a money losing machine for the dumb money. Every day, billions and billions are moved from the poor to the rich, if you want to put it in such a polemic way, okay? It's just another system in our capitalist system overall, yeah, where the ignorant get exploited by the ones who have the real insights. And my work here tries to level that, okay? I'm trying my best by taking risks myself, by going all in to provide you with a professional tool, an institutional grade tool, which allows you to not fall victim to these nasty, nasty games, okay? This is my motivation. It's not to make maximum profit, it's to change that, make markets fairer again, and to help you, okay? Because it's not fair when markets are so highly manipulated and, you know, people lose their money over a rigged game. That's not okay. So this is our answer to counter that, okay? Remember, it's at the moment super cheap, only £59 per month. If you take trading seriously, that's nothing, okay? If you can't spend £59 per month on your forex trading, you're not serious. Here you get a real edge, okay? You don't need to spend years and thousands of pounds jumping from one strategy to the next, jumping from one indicator to the next, jumping from one template to the next, just to always lose money. Stop that. Stop it, okay? This is the edge. You can't replicate this stuff. This is technological driven. It's very complex, okay? I have shown this once to one of the top 3 hedge funds and they were impressed. I will make a video about this one day. Okay? Use this. This is still here. You can still use it. Use it to trade. This is really the way. Lots of love. Stay safe.